Question 1. The audit findings indicate a potential misstatement in Sanmina's inventory valuation that could impact the current quarter's reported earnings. As a senior manager responsible for financial reporting, you are aware that disclosing this discrepancy immediately would likely result in missing the projected profit targets for the quarter. What is the most ethically and regulatorily sound course of action? Option A. Immediately report the audit findings to the Chief Financial Officer and the Head of Internal Audit, initiating a formal investigation into the inventory valuation discrepancy. Option B. Delay the formal reporting of the audit findings until after the quarter closes, allowing time to investigate and potentially correct the discrepancy without public disclosure of a miss. Option C. Instruct the accounting team to adjust the inventory valuation to align with the quarterly targets and address the audit findings internally without formal reporting. Option D. Discuss the audit findings with the audit team to understand their methodology and attempt to find alternative interpretations that would not impact the current quarter's earnings. Correct answer is A. Immediately report the audit findings to the Chief Financial Officer and the Head of Internal Audit, initiating a formal investigation into the inventory valuation discrepancy. Explanation. This scenario presents a professional challenge due to the conflict between immediate financial pressures and long-term ethical obligations. The pressure to meet quarterly targets can tempt individuals to overlook or downplay significant findings, potentially jeopardizing the company's integrity and future. Careful judgment is required to balance business objectives with adherence to regulatory frameworks and ethical principles. The correct approach involves transparently reporting the audit findings to the appropriate internal stakeholders and initiating a thorough investigation. This aligns with the principles of good corporate governance and regulatory compliance, which mandate accurate financial reporting and proactive risk management. By addressing the issue promptly and openly, Sanmina upholds its commitment to ethical conduct and avoids potential legal and reputational damage. An incorrect approach would be to suppress or minimize the audit findings to avoid negative quarterly results. This action constitutes a violation of ethical duties and potentially regulatory requirements related to financial transparency and accurate record keeping. It creates a false impression of the company's financial health and could lead to more severe consequences if discovered later. Another incorrect approach is to attempt to rectify the issue without proper documentation or internal reporting. This can lead to further complications, as it bypasses established internal controls and audit procedures. It also fails to involve the necessary expertise within Sanmina to properly assess and address the root cause of the discrepancy, potentially leading to recurring problems. Finally, an incorrect approach would be to blame the audit team for the findings. This deflects responsibility and undermines the integrity of the audit process. It is crucial for professionals to accept constructive criticism and work collaboratively to resolve issues, rather than creating an adversarial environment. The professional decision-making process in such situations should involve 1. Acknowledging the findings without immediate judgment. 2. Consulting relevant internal policies and procedures regarding audit findings and reporting. 3. Escalating the findings to the designated compliance or legal department. 4. Cooperating fully with any subsequent investigation. 5. Prioritizing ethical conduct and regulatory compliance over short-term financial gains. Question 2. Analysis of how a Sanmina procurement manager should respond when a key supplier, during a routine business meeting, offers a high-value gift that exceeds the typical value of business courtesies and could be perceived as an attempt to influence future contract awards. Option A. Suggest that the supplier offer a less expensive gift that might be permissible under Sanmina's policy. Option B. Politely decline the offer, citing Sanmina's policy on gifts and reaffirming the value of the business relationship. Option C. Accept the gift without question, as it is a gesture of goodwill from a valued supplier. Option D. Accept the gift but plan to report it to Sanmina's compliance department after the meeting. The correct answer is B. Politely decline the offer, citing Sanmina's policy on gifts and reaffirming the value of the business relationship. Explanation. Scenario analysis. This scenario is professionally challenging because it requires an employee at Sanmina to navigate potential conflicts of interest and maintain ethical conduct while interacting with a key supplier. The challenge lies in balancing the need for a positive working relationship with the imperative to avoid any perception or reality of impropriety that could compromise Sanmina's integrity or lead to unfair advantages. Careful judgment is required to ensure all interactions are transparent, fair, and compliant with Sanmina's internal policies and relevant ethical standards. Correct approach analysis. The correct approach involves politely declining the offer of a lavish gift and explaining that Sanmina's policy prohibits accepting such items, while reaffirming the value of the business relationship. This approach is right because it directly upholds Sanmina's ethical standards and internal policies regarding gifts and entertainment. It demonstrates integrity and professionalism by prioritizing compliance and avoiding even the appearance of a conflict of interest. This aligns with general principles of corporate governance and ethical business practices, which are often codified in company policies and expected by stakeholders. Incorrect approach is analysis. Accepting the gift without question and without reporting it to Sanmina's compliance department would be an ethical failure. This approach could create a perceived or actual conflict of interest, potentially influencing future business decisions and undermining trust. It violates the principle of impartiality and could expose Sanmina to reputational damage and regulatory scrutiny if discovered. Accepting the gift but intending to report it later to Sanmina's compliance department is also problematic. While reporting is a positive step, accepting the gift first creates an immediate ethical lapse. The act of acceptance, even with the intention to report, can still create a perception of impropriety and may violate policies that require pre-approval or outright refusal of certain gifts. The delay in reporting also introduces unnecessary risk, suggesting that the supplier offer a smaller, less extravagant gift that might be permissible under Sanmina's policy is an inappropriate response. This approach attempts to circumvent the spirit of the policy by seeking a loophole, rather than adhering to its core principle of avoiding gifts that could influence business decisions. It demonstrates a lack of commitment to ethical conduct and could still lead to a perception of favoritism. Professional reasoning. Professionals should approach situations involving potential conflicts of interest by first consulting their organization's code of conduct and relevant policies. When faced with an offer that seems questionable, the default professional decision-making process should be to err on the side of caution and transparency. This involves politely declining, seeking clarification from the appropriate internal department, e.g., compliance, legal, HR, and documenting the interaction. The goal is to maintain a strong ethical foundation and protect the organization's reputation and interests. Question 3. The monitoring system demonstrates that Sanmina's hiring assessment test platform is collecting detailed user interaction data, including keystroke logging and mouse movement patterns, for all candidates. This data is being aggregated for performance analysis to identify potential areas for platform improvement. What is the most appropriate next step for the Sanmina compliance team? Option A. Immediately cease all data collection from the monitoring system to avoid any potential privacy violations. Option B. Inform candidates that their detailed interaction data is being collected for performance analysis without first verifying the legality and necessity of such collection. Option C. Conduct a comprehensive review of the collected data against Sanmina's data privacy policies and applicable U.S. federal and state privacy regulations to determine its necessity and lawfulness for the stated purpose. Option D. Continue aggregating and analyzing all collected data, assuming that performance analysis inherently justifies the collection of detailed user interaction data. Correct answer is A. Immediately cease all data collection from the monitoring system to avoid any potential privacy violations. Explanation. This scenario presents a professional challenge because it requires Sanmina's compliance team to balance the need for efficient data analysis with the stringent requirements of data privacy and security regulations. Misinterpreting or misapplying these regulations can lead to significant legal penalties, reputational damage, and loss of stakeholder trust. Careful judgment is required to ensure that, while monitoring systems are effective, they do not inadvertently breach regulatory mandates. The correct approach involves a thorough review of the data collected by the monitoring system against Sanmina's internal data privacy policies and relevant regulatory frameworks. This ensures that only data permissible for collection and analysis is being processed, and that appropriate safeguards are in place. Specifically, if the Sanmina hiring assessment test is governed by U.S. regulations, This would involve adherence to principles like those found in the California Consumer Privacy Act, CCPA, or similar state-level privacy laws, and potentially federal laws like HIPAA if health-related data is involved, ensuring data minimization, purpose limitation, and transparency. The focus is on understanding the nature of the data being monitored, and its intended use in relation to legal permissions. An incorrect approach that involves broadly collecting and analyzing all available data without a clear, legally defined purpose risks violating data minimization principles. This could lead to the collection of sensitive personal information that is not necessary for the assessment's objectives, thereby exposing Sanmina to regulatory scrutiny and potential fines under privacy laws. Another incorrect approach, which is to ignore the monitoring system's output due to concerns about privacy, would be professionally negligent. This failure to act on potentially critical information, even if it requires careful handling, could lead to missed opportunities for process improvement or identification of compliance issues, ultimately undermining the effectiveness of Sanmina's hiring processes and potentially leading to other forms of noncompliance if the monitored activity relates to regulatory adherence. A third incorrect approach, which is to assume all collected data is compliant without verification, bypasses the essential due diligence required by regulatory frameworks. This assumption can lead to the continued use of non-compliant data processing, creating a hidden risk that could surface during an audit or investigation. Professionals should employ a risk-based approach. This involves identifying potential regulatory touchpoints for the data being monitored, understanding the specific requirements of those regulations, e.g., consent, purpose, security, and implementing controls to ensure compliance. Regular audits and reviews of monitoring systems and data handling practices are crucial to adapt to evolving regulations and business needs. Question 4. Quality control measures reveal a recurring anomaly in the output of a specific manufacturing line at Sanmina, potentially impacting product specifications. The anomaly is subtle and has not yet led to a customer complaint, but it deviates from the established quality control parameters. The production supervisor, under pressure to meet output targets, is considering several immediate actions. Option A. Initiate a comprehensive root cause analysis involving engineering, quality assurance, and production teams, meticulously documenting all findings and implementing a corrective action plan in accordance with Sanmina's quality management system and relevant industry regulations. Option B. Advise the production team to make minor, undocumented adjustments to the manufacturing process based on anecdotal observations to mitigate the anomaly. Without formal investigation or approval, Option C. Immediately halt the production line, quarantine all potentially affected units, and proceed with a detailed investigation and disposition of the affected inventory before resuming operations. Option D. Instruct the production line to continue operating at full capacity while informally observing the anomaly, with the expectation that it may self-correct or remain within acceptable, albeit suboptimal, tolerances. Correct answer is A. Initiate a comprehensive root cause analysis involving engineering, quality assurance, and production teams, meticulously documenting all findings and implementing a corrective action plan in accordance with Sanmina's quality management system and relevant industry regulations. Explanation. This scenario presents a professional challenge because it requires immediate action to address a potential breach of Sanmina's internal quality standards, and, more importantly, potential regulatory noncompliance. The challenge lies in balancing the need for swift resolution with the imperative to adhere strictly to established protocols and ethical guidelines, ensuring that any corrective action is both effective and defensible. Careful judgment is required to avoid overreacting or underreacting, which could lead to further complications. The correct approach involves a thorough, documented investigation that prioritizes data integrity and regulatory adherence. This approach is professionally sound because it systematically identifies the root cause of the quality issue without compromising the integrity of the data or the manufacturing process. By involving the relevant internal departments and adhering to Sanmina's established quality management system, it ensures that any corrective actions are implemented in a controlled and compliant manner, aligning with best practices for product quality and regulatory oversight. This methodical process minimizes the risk of further errors and demonstrates a commitment to continuous improvement and compliance. An incorrect approach that involves immediately discarding the affected components without proper documentation or investigation fails to address the root cause and could mask a systemic issue. This bypasses established quality control procedures and regulatory requirements for traceability and defect analysis, potentially leading to repeated failures and significant compliance risks. Another incorrect approach, which is to proceed with production while hoping the issue resolves itself, is professionally unacceptable. This demonstrates a disregard for quality standards and regulatory obligations, exposing Sanmina to potential product recalls, customer dissatisfaction, and severe penalties for non-compliance. It prioritizes expediency over responsibility and ethical conduct. Finally, an approach that involves making assumptions about the cause and implementing a quick fix without proper validation or documentation is also flawed. This can lead to ineffective solutions, further damage to product quality, and a failure to meet regulatory expectations for root cause analysis and corrective action. It undermines the principles of data-driven decision-making and robust quality management. Professionals should employ a structured problem-solving framework that begins with clear identification of the issue, followed by data gathering, root cause analysis, development and implementation of corrective actions, and finally, verification of effectiveness. This framework ensures that decisions are informed, compliant, and contribute to the long-term quality and integrity of Sanmina's operations. Question 5. Research into Sanmina's internal data handling procedures reveals that a senior manager has requested immediate access to preliminary sales figures for a specific region, stating it's for an urgent internal presentation. However, you know these figures are still being compiled and may not reflect the final, accurate numbers. Option A. Politely decline to provide the figures, stating that only finalized and verified data can be shared, and offer to assist in expediting the finalization process. Option B. Provide the preliminary figures but add a disclaimer that they are subject to change. Option C. Suggest an alternative method to quickly estimate the figures that bypasses the usual verification steps. Option D. Provide the preliminary figures immediately to the senior manager, explaining they are not yet finalized. The correct answer is D. Provide the preliminary figures immediately to the senior manager, explaining they are not yet finalized. Explanation. This scenario presents a professional challenge because it requires balancing a direct request from a senior colleague with the ethical obligation to maintain data integrity and adhere to Sanmina's internal policies. The pressure to quickly provide information, even if potentially incomplete or misleading, can create a conflict between loyalty and professional responsibility. Careful judgment is required to navigate this situation without compromising ethical standards or regulatory compliance. The correct approach involves politely but firmly declining to provide the requested information without proper verification and documentation, and instead offering to assist in gathering the correct data through established channels. This upholds professional integrity by prioritizing accuracy and adherence to internal procedures. Specifically, it aligns with general ethical principles of honesty and transparency in business dealings, and implicitly with any Sanmina policies that mandate data accuracy and proper reporting. By refusing to provide potentially inaccurate information, the employee avoids contributing to any misrepresentation of Sanmina's performance or financial standing. Providing the information without verification is professionally unacceptable because it risks disseminating inaccurate data, which could lead to poor business decisions by management or external stakeholders. This failure directly contravenes the ethical duty of accuracy and honesty. Fulfilling the request immediately without questioning its purpose or implications is also professionally unacceptable. While appearing helpful, it bypasses necessary checks and balances, potentially enabling a misrepresentation of facts. This demonstrates a lack of critical thinking and adherence to due diligence. Suggesting a workaround that circumvents official data reporting channels, even with good intentions, is professionally unacceptable. It undermines established processes designed to ensure data integrity and compliance, and could expose Sanmina to risks if the workaround leads to errors or non-compliance. The professional reasoning framework for similar situations involves 1. Identifying the ethical conflict. Is there a tension between a request and your professional obligations? 2. Consulting internal policies. What do Sanmina's guidelines say about data handling and reporting? 3. Prioritizing accuracy and integrity. Ensure any information provided is correct and verifiable. 4. Communicating professionally. Decline requests that compromise integrity, explaining your reasoning based on policy or ethical principles, and offer constructive alternatives. 5. Escalating if necessary. If the pressure to compromise ethical standards persists, consider escalating the issue to a supervisor or compliance department. Question 6. Risk assessment procedures indicate that Sanmina has identified significant potential supply chain disruptions for a key component required for a large, lucrative contract with a new client. While these disruptions are not guaranteed, they carry a material probability of impacting delivery timelines and increasing costs. Sanmina is in the final stages of contract negotiation, and the client is eager to finalize the agreement. How should Sanmina proceed? Option A. Fully disclose the identified supply chain risks to the potential client, including the potential impact on timelines and costs, and discuss mitigation strategies. Option B. Proceed with finalizing the contract as planned, assuming the risks will not materialize or can be managed internally without informing the client. Option C. Delay the contract finalization indefinitely until all potential supply chain risks are completely eliminated, even if it means losing the opportunity. Option D. Downplay the severity of the identified supply chain risks to the client, emphasizing only the positive aspects of the contract and Sanmina's ability to deliver. Correct answer is A. Fully disclose the identified supply chain risks to the potential client, including the potential impact on timelines and costs, and discuss mitigation strategies. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's desire to secure a significant contract and the ethical obligation to maintain transparency and avoid misleading potential partners. The pressure to close a deal can lead to overlooking or downplaying critical risks, which can have severe consequences for Sanmina and its stakeholders. Careful judgment is required to balance business objectives with ethical responsibilities and regulatory compliance. The correct approach involves proactively and transparently disclosing the identified risks to the potential partner. This demonstrates integrity and allows the partner to make an informed decision based on a complete understanding of the situation. This aligns with ethical principles of honesty and fairness, and regulatory expectations that companies act in good faith and do not engage in deceptive practices. By openly sharing the information, Sanmina upholds its commitment to responsible business conduct and builds trust, which is crucial for long-term partnerships. An incorrect approach of withholding or minimizing the identified risks would be a failure of ethical duty and potentially a violation of regulatory requirements related to disclosure and fair dealing. This could lead to legal repercussions, reputational damage, and a breakdown of trust with the partner. Another incorrect approach of proceeding with the contract without addressing the risks internally first would be negligent. It fails to uphold the company's responsibility to manage its own operational vulnerabilities and could expose Sanmina to unforeseen liabilities. Finally, an approach that focuses solely on the potential financial gain without considering the ethical implications and potential harm to the partner demonstrates a disregard for responsible corporate citizenship and could lead to severe long-term consequences. Professionals should employ a decision-making framework that prioritizes ethical considerations and regulatory compliance. This involves identifying potential conflicts of interest, assessing risks thoroughly, seeking guidance from legal and compliance departments when necessary, and communicating transparently with all relevant parties. The ultimate goal is to make decisions that are not only beneficial to the company, but also uphold its integrity and adhere to the highest ethical standards. Question 7. Comparative studies suggest that effective risk assessment is paramount for companies like Sanmina when integrating new suppliers into their operations. Considering Sanmina's commitment to regulatory compliance and ethical business practices, which of the following approaches to assessing a new supplier's data security protocols and ethical sourcing standards would be considered the most professionally responsible and compliant? Option A. Prioritizing the supplier's ability to offer the lowest cost for services, with minimal emphasis on verifying their data security or ethical sourcing claims to expedite the onboarding process. Option B. Relying solely on the supplier's self-attestation regarding their data security measures and ethical labor practices, assuming they are compliant due to their established reputation. Option C. Conducting a comprehensive due diligence process that includes independent verification of the supplier's data security certifications, a review of their data handling policies, and an audit of their labor practices to ensure compliance with relevant ethical sourcing guidelines. Option D. Performing a cursory review of the supplier's website for any mention of security or ethical policies, without engaging in direct verification or independent assessment. The correct answer is C. Conducting a comprehensive due diligence process that includes independent verification of the supplier's data security certifications, a review of their data handling policies, and an audit of their labor practices to ensure compliance with relevant ethical sourcing guidelines. Explanation: this scenario presents a professional challenge because Sanmina, as a publicly traded company, operates within a highly regulated environment. The assessment of risk associated with a new supplier requires a thorough understanding of compliance obligations, particularly concerning data security and ethical sourcing, which are critical for maintaining investor confidence and avoiding regulatory penalties. The pressure to onboard a new supplier quickly can create a tension between operational efficiency and robust due diligence, demanding careful judgment to balance these competing priorities. The correct approach involves a comprehensive risk assessment that prioritizes data security and ethical considerations in line with relevant regulations. This approach is professionally sound because it proactively identifies potential vulnerabilities and ensures that Sanmina's operations and supply chain adhere to legal and ethical standards. Specifically, it aligns with the principles of responsible corporate governance and the need to protect sensitive information, which are implicitly or explicitly mandated by various regulatory frameworks governing publicly traded companies, such as those overseen by the Securities and Exchange Commission, SEC, in the U.S., which emphasizes disclosure and risk management. By conducting thorough due diligence, Sanmina mitigates the risk of data breaches, reputational damage, and potential legal liabilities. An incorrect approach that bypasses thorough due diligence on data security protocols would be professionally unacceptable. This failure would violate the ethical obligation to protect customer and company data and could contravene regulations like the General Data Protection Regulation, GDPR, if applicable to Sanmina's operations or data handling, or similar data privacy laws in other jurisdictions where Sanmina operates. Another incorrect approach, focusing solely on cost savings without assessing the supplier's compliance with labor laws and ethical sourcing standards, would be a significant ethical and regulatory failure. This could lead to association with unethical labor practices, violating corporate social responsibility expectations, and potentially contravening regulations aimed at preventing forced labor or other human rights abuses in supply chains. A third incorrect approach, prioritizing speed of integration over any form of risk assessment, demonstrates a disregard for fundamental compliance and risk management principles, exposing Sanmina to a wide array of legal, financial, and reputational risks. Professionals should employ a structured decision-making framework that begins with identifying all relevant regulatory requirements and ethical considerations. This framework should then involve a systematic assessment of potential risks associated with each aspect of the supplier relationship, including data security, operational integrity, and ethical conduct. Prioritizing risks based on their potential impact and likelihood, and then developing mitigation strategies, is crucial. The decision to onboard a supplier should be contingent upon the satisfactory mitigation of identified risks to an acceptable level, ensuring alignment with both legal obligations and the company's ethical standards. Question 8. The risk matrix shows a moderate likelihood of a supply chain disruption impacting Sanmina's key manufacturing facility in the United States due to geopolitical instability in a region supplying critical components, alongside a low likelihood of a minor data breach affecting non-sensitive customer information. Which approach best reflects Sanmina's professional responsibility in managing these identified risks? Option A. Immediately allocate significant resources to develop contingency plans for the supply chain disruption and conduct a comprehensive review of cybersecurity protocols for the data breach. Option B. Prioritize addressing the supply chain disruption due to its potential for significant operational and financial impact on Sanmina's core business, while implementing basic preventative measures for the data breach. Option C. Initiate a detailed cost-benefit analysis for both risks to determine the most financially efficient response, potentially delaying mitigation for the supply chain issue if the immediate cost of disruption is perceived as lower than the cost of prevention. Option D. Focus all available resources on addressing the data breach, as it involves sensitive customer information, and defer action on the supply chain issue until it becomes more imminent. The correct answer is A. Immediately allocate significant resources to develop contingency plans for the supply chain disruption and conduct a comprehensive review of cybersecurity protocols for the data breach. Explanation: this scenario presents a professional challenge because Sanmina, as a global manufacturing company, operates within a complex web of regulations and ethical considerations. The risk matrix, a standard tool for assessing potential threats, highlights the need for a nuanced approach that goes beyond simple identification. The challenge lies in prioritizing and responding to risks in a way that is both compliant with applicable laws and aligned with ethical business practices, particularly when faced with potentially conflicting priorities or limited resources. Careful judgment is required to distinguish between theoretical risks and those that pose an immediate or significant threat to Sanmina's operation. Reputation or stakeholders. The correct approach involves a proactive and integrated risk management strategy that prioritizes risks based on their potential impact and likelihood, and then develops specific mitigation plans. This approach is professionally sound because it aligns with the principles of good corporate governance and regulatory compliance. Specifically, it reflects a commitment to identifying and addressing potential issues before they escalate, thereby protecting Sanmina from financial penalties, legal liabilities, and reputational damage. This systematic process ensures that resources are allocated effectively to manage the most critical risks, demonstrating due diligence and a responsible approach to business operations. An incorrect approach that focuses solely on the most visible or frequently discussed risks, without a structured assessment of their actual impact or likelihood, fails to meet regulatory expectations for comprehensive risk management. This can lead to a misallocation of resources, leaving Sanmina vulnerable to less obvious but potentially more damaging threats. Another incorrect approach that prioritizes short-term cost savings over robust risk mitigation overlooks the long-term financial and reputational consequences of unchecked risks, which can result in significant regulatory sanctions and operational disruptions. Furthermore, an approach that disregards potential ethical implications of identified risks, focusing only on legal compliance, is insufficient. Modern regulatory frameworks and stakeholder expectations demand a higher standard of ethical conduct, and ignoring ethical dimensions can lead to severe reputational damage and loss of trust, even if strictly legal. Professionals should employ a decision-making framework that begins with a thorough understanding of the Sanmina's operational context and the relevant regulatory landscape. This involves systematically identifying potential risks, assessing their likelihood and impact using tools like the risk matrix, and then prioritizing them. For each prioritized risk, a clear mitigation strategy should be developed, considering both regulatory requirements and ethical considerations. This strategy should be communicated to relevant stakeholders and regularly reviewed and updated. The process should be documented to demonstrate due diligence and compliance. Question 9. Regulatory review indicates that Sanmina is enhancing its enterprise risk management framework. Which of the following approaches best aligns with robust risk assessment practices for a publicly traded manufacturing company like Sanmina, ensuring compliance and strategic alignment? Option A. Relying exclusively on an external risk management consultancy to conduct all risk assessments and report findings directly to the board without internal validation. Option B. Conducting a one-time broad-brush risk assessment to identify major risks and then filing the report without subsequent monitoring or updates. Option C. Implementing a comprehensive risk assessment process that integrates operational, financial, strategic, and compliance risks, with regular reviews and updates driven by internal expertise and validated by external audits. Option D. Focusing the risk assessment primarily on historical financial performance data to identify past areas of financial underperformance. The correct answer is C. Implementing a comprehensive risk assessment process that integrates operational, financial, strategic, and compliance risks, with regular reviews and updates driven by internal expertise and validated by external audits. Explanation: this scenario presents a professional challenge because Sanmina, as a publicly traded company, must navigate complex regulatory requirements for risk assessment and reporting. The challenge lies in balancing the need for comprehensive risk identification with the practicalities of resource allocation, and the potential for overreporting or underreporting material risks. Careful judgment is required to ensure that the risk assessment process is robust, compliant, and effectively informs strategic decision-making without becoming an administrative burden. The correct approach involves a proactive and integrated risk management framework that aligns with Sanmina's business objectives and regulatory obligations. This approach is professionally sound because it demonstrates a commitment to identifying, assessing, and mitigating potential threats to the company's operations, financial stability, and reputation. Specifically, it adheres to the principles of good corporate governance and regulatory compliance by ensuring that risks are systematically evaluated and managed. This proactive stance helps prevent potential financial losses, reputational damage, and legal liabilities, thereby safeguarding shareholder value and ensuring the long-term sustainability of Sanmina. An incorrect approach that focuses solely on historical financial data without considering emerging operational or strategic risks would be professionally unacceptable. This failure stems from a narrow interpretation of risk, neglecting forward-looking assessments crucial for anticipating future challenges. It violates the spirit of comprehensive risk management, which requires considering a broader spectrum of potential threats, including those not yet reflected in financial statements. Another incorrect approach, which involves delegating the entire risk assessment process to external consultants without internal oversight or validation, is also professionally unsound. While external expertise can be valuable, complete abdication of responsibility by Sanmina's management and board would be a significant ethical and regulatory failure. It suggests a lack of internal capacity or commitment to risk management, potentially leading to a superficial assessment that does not fully understand Sanmina's unique operational context or strategic priorities. This approach risks overlooking critical internal control weaknesses or compliance gaps that only internal stakeholders can fully appreciate. A professional decision-making process for similar situations should involve a structured approach. First, clearly define the scope and objectives of the risk assessment in alignment with Sanmina's strategic goals and regulatory environment. Second, establish a cross-functional team with diverse expertise to ensure a holistic view of potential risks. Third, employ a combination of qualitative and quantitative assessment methodologies, prioritizing those that are most relevant to Sanmina's industry and operations. Fourth, ensure robust internal review and validation of findings, with clear escalation paths for significant risks. Finally, regularly review and update the risk assessment process to adapt to changing internal and external environments, fostering a culture of continuous improvement in risk management. Question 10. Consider a scenario where Sanmina's internal audit team identifies a significant operational risk that could materially impact the company's upcoming quarterly earnings. The risk has been communicated to senior management, who are concerned about the potential negative reaction from investors and analysts if this information is disclosed immediately. What is the most appropriate course of action for Sanmina's management to ensure compliance with U.S. securities regulations and ethical best practices? Option A. Downplay the significance of the operational risk in all external communications to maintain investor confidence and avoid a negative stock price reaction. Option B. Immediately disclose the identified operational risk and its potential impact on quarterly earnings to the public and relevant regulatory bodies, alongside a plan for mitigation. Option C. Focus solely on internal efforts to mitigate the operational risk without any external disclosure, assuming the issue will be resolved before it materially affects reported earnings. Option D. Delay public disclosure of the operational risk until the full extent of its impact can be quantified and a comprehensive mitigation strategy is fully implemented. The correct answer is B. Immediately disclose the identified operational risk and its potential impact on quarterly earnings to the public and relevant regulatory bodies, alongside a plan for mitigation. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's desire for rapid growth and the imperative to adhere strictly to regulatory compliance, particularly concerning financial reporting and investor relations. Sanmina, as a publicly traded entity, is subject to rigorous oversight, and any misrepresentation or omission of material information can have severe legal, financial, and reputational consequences. The pressure to meet ambitious targets can tempt individuals to overlook or downplay potential issues, making ethical judgment and a commitment to regulatory frameworks paramount. The correct approach involves a proactive and transparent communication strategy, prioritizing accurate disclosure of all material information to regulatory bodies and investors. This means acknowledging the identified risks and their potential impact on financial performance, even if it leads to a short-term negative market reaction. This approach aligns with the principles of the Securities Exchange Act of 1934, specifically Section 10(b) and Rule 10(b)(5), which prohibit fraudulent or misleading statements in connection with the purchase or sale of securities. It also upholds the ethical duty of officers and directors to act in the best interests of the company and its shareholders, which includes providing truthful and complete information. An incorrect approach that involves downplaying or omitting the identified risks to maintain investor confidence would constitute a violation of securities laws. This could be interpreted as a material misstatement or omission, leading to potential SEC enforcement actions, shareholder lawsuits, and significant damage to Sanmina's reputation. Another incorrect approach, which is to delay disclosure until the full extent of the impact is understood, also carries risks. While seeking clarity is important, an unreasonable delay in disclosing known material risks can also be viewed as misleading investors, especially if the delay is intended to manipulate market perception. Furthermore, focusing solely on internal mitigation strategies without informing external stakeholders about the existence of the risks, even if mitigation is underway, fails to meet the disclosure obligations. Professionals in such situations should employ a decision-making framework that begins with identifying the core ethical and regulatory obligations. This involves consulting relevant legal counsel and compliance officers to understand the precise disclosure requirements. The decision should then be guided by the principle of transparency and accuracy, even when the news is unfavorable. A robust internal control system that encourages the reporting of potential issues without fear of reprisal is also crucial. Ultimately, the long-term health and sustainability of Sanmina depend on maintaining trust with investors and regulators, which can only be achieved through unwavering adherence to legal and ethical standards. Question 11. Benchmark analysis indicates that Sanmina is facing pressure to meet its previously communicated quarterly earnings forecast. However, internal reviews reveal that certain revenue recognition issues and unexpected cost increases will likely cause the company to fall short of this target. Considering the regulatory framework governing public companies, which of the following represents the most appropriate course of action for Sanmina's management? Option A. Adjust accounting entries to defer recognition of certain expenses and accelerate recognition of some anticipated future revenue to meet the original forecast. Option B. Delay the public announcement of the earnings results until a strategy can be developed to mitigate the impact of the shortfall on future quarters. Option C. Proactively communicate the revised financial outlook to the market, explaining the reasons for the adjustment and providing updated projections based on the latest information. Option D. Inform key institutional investors and analysts of the potential shortfall before the public earnings release to manage their expectations. The correct answer is C. Proactively communicate the revised financial outlook to the market, explaining the reasons for the adjustment and providing updated projections based on the latest information. Explanation. This scenario presents a professional challenge because Sanmina, as a publicly traded company, must adhere to stringent regulatory requirements regarding financial reporting and disclosure. The pressure to meet market expectations, coupled with the potential for personal gain, creates a conflict of interest and a risk of engaging in unethical or illegal practices. Careful judgment is required to navigate these pressures while upholding integrity and compliance. The correct approach involves a commitment to accurate and transparent financial reporting, even when it deviates from optimistic projections. This aligns with the principles of generally accepted accounting principles, GAAP, and securities regulations, which mandate that financial statements reflect the true economic substance of transactions. Specifically, it adheres to the spirit and letter of regulations like the Securities Exchange Act of 1934, which prohibits fraudulent and misleading statements. By proactively communicating the revised outlook and the reasons behind it, Sanmina demonstrates good corporate governance and respects the information needs of its investors, thereby avoiding potential insider trading or market manipulation issues. An incorrect approach would be to manipulate accounting entries to artificially inflate revenue or defer expenses to meet the initial forecast. This directly violates GAAP and securities laws, such as those enforced by the Securities and Exchange Commission, SEC, which prohibit accounting fraud and misrepresentation. Such actions can lead to severe penalties, including fines, sanctions, and reputational damage. Another incorrect approach would be to selectively disclose information to certain analysts or investors before making a public announcement. This constitutes selective disclosure, a form of insider trading, and is a serious violation of securities regulations designed to ensure fair and equitable access to material non-public information for all market participants. A third incorrect approach would be to delay the recognition of known liabilities or contingent losses to maintain the appearance of strong performance. This misrepresents the company's financial position and can mislead investors about the true risks and financial health of Sanmina, violating the duty of full and fair disclosure. The professional decision-making process for similar situations should involve a clear understanding of ethical principles and regulatory obligations. Professionals should prioritize accuracy, transparency, and fairness in all financial dealings. When faced with pressure to deviate from these principles, they should consult with legal and compliance departments, seek guidance from senior management, and if necessary, escalate concerns through established whistleblowing channels. The ultimate goal is to protect the integrity of the financial markets and the trust of stakeholders. Question 12. The investigation demonstrates that Sanmina is exploring new strategies to optimize its manufacturing processes and reduce operational costs. Which of the following approaches best balances efficiency gains with regulatory compliance and ethical considerations for Sanmina? Option A. Aggressively seeking the lowest cost raw material suppliers globally, without conducting in-depth due diligence on their environmental and labor practices. Option B. Expediting product development cycles by reducing the scope of quality control and safety testing to accelerate time to market. Option C. Disregarding the proper disposal and recycling protocols for electronic waste generated during manufacturing and from returned products to minimize immediate disposal expenses. Option D. Implementing a comprehensive product lifecycle assessment to identify opportunities for waste reduction, energy efficiency, and material circularity across all stages of production and end-of-life management. The correct answer is D. Implementing a comprehensive product lifecycle assessment to identify opportunities for waste reduction, energy efficiency, and material circularity across all stages of production and end-of-life management. Explanation. This scenario presents a professional challenge because Sanmina, as a global manufacturing company, operates within a complex web of regulations and ethical considerations regarding its supply chain and product lifecycle. The pressure to optimize processes, while crucial for business efficiency and competitiveness, must be balanced against strict adherence to environmental, labor, and product safety standards. A failure to do so can result in significant legal penalties, reputational damage, and loss of stakeholder trust. Careful judgment is required to identify process improvements that are not only cost-effective, but also compliant and ethically sound. The correct approach involves a holistic review of Sanmina's product lifecycle, from design and sourcing to manufacturing, distribution, and end-of-life management, with a specific focus on identifying opportunities for waste reduction, energy efficiency, and material circularity. This approach aligns with the principles of sustainable manufacturing and corporate social responsibility, which are increasingly codified in regulatory frameworks and expected by stakeholders. By integrating environmental and social considerations into process optimization, Sanmina can achieve long-term value creation while mitigating risks associated with non-compliance. This proactive stance is often supported by industry best practices and voluntary standards that promote responsible business conduct, an approach that solely focuses on reducing manufacturing costs by sourcing cheaper, less regulated materials without a thorough due diligence process would be professionally unacceptable. This could lead to violations of environmental regulations concerning hazardous substances, e.g., RoHS, REACH if applicable to Sanmina's markets, and labor laws in the countries of origin, potentially exposing Sanmina to fines, sanctions, and severe reputational damage. Similarly, an approach that prioritizes speed to market by bypassing rigorous quality control and safety testing procedures for new product introductions could result in product recalls, customer harm, and legal liabilities, contravening consumer protection laws and industry-specific safety standards. Finally, an approach that neglects the responsible disposal or recycling of electronic waste generated during manufacturing or from end-of-life products would violate evolving waste management regulations and environmental protection laws, leading to potential penalties and environmental harm. Professionals should employ a decision-making framework that begins with understanding the full scope of relevant regulations and ethical expectations applicable to Sanmina's operations and its products in its target markets. This involves conducting thorough risk assessments for each proposed process optimization initiative, considering environmental, social, and governance-esque factors. Prioritizing initiatives that offer a clear return on investment while demonstrably enhancing compliance and sustainability is key. Continuous monitoring and auditing of implemented processes are essential to ensure ongoing adherence to standards and to identify areas for further improvement. Question 13. The analysis reveals that Sanmina is facing significant pressure to meet its quarterly earnings targets. A senior executive suggests accelerating the booking of certain anticipated future sales orders to recognize revenue in the current quarter, arguing this will positively impact investor perception and stock price. This suggestion, however, is not fully aligned with Sanmina's standard revenue recognition policies, which typically require a higher degree of certainty regarding delivery and customer acceptance before booking revenue. What is the most appropriate course of action for a compliance officer at Sanmina? Option A. Politely decline the executive's suggestion, citing the need to adhere strictly to Sanmina's established revenue recognition policies and relevant accounting standards to ensure accurate financial reporting. Option B. Seek external legal counsel to explore loopholes in accounting regulations that might permit the accelerated revenue recognition without explicit policy violation. Option C. Implement the executive's suggestion to book the anticipated sales orders, as meeting earnings targets is crucial for maintaining investor confidence and the company's market position. Option D. Discuss the suggestion with the executive's peers to gauge their opinion and proceed with the executive's plan. If a majority agrees, it is a reasonable approach to meet targets. The correct answer is A. Politely decline the executive's suggestion, citing the need to adhere strictly to Sanmina's established revenue recognition policies and relevant accounting standards to ensure accurate financial reporting. Explanation: this scenario presents a professional challenge because it requires balancing the company's immediate financial interests with its long-term ethical and regulatory obligations. Sanmina, as a publicly traded company, is subject to stringent regulations regarding financial reporting and disclosure. The pressure to meet quarterly earnings targets can create a conflict of interest, potentially leading individuals to consider actions that, while seemingly beneficial in the short term, could have severe legal and reputational consequences. Careful judgment is required to navigate this pressure and ensure compliance. The correct approach involves a commitment to accurate and transparent financial reporting, even if it means acknowledging a shortfall in projected earnings. This aligns with the fundamental principles of corporate governance and securities law, which mandate that companies provide truthful and complete information to investors. Specifically, this approach adheres to regulations like the Securities Exchange Act of 1934 in the U.S., which prohibits fraudulent and misleading statements in connection with the purchase or sale of securities. Ethical considerations also dictate that stakeholders, including investors, have a right to accurate information to make informed decisions. An incorrect approach of manipulating revenue recognition to artificially inflate earnings would constitute a serious violation of accounting standards and securities laws. This could involve recognizing revenue prematurely or creating fictitious transactions, which are forms of accounting fraud. Such actions undermine investor confidence, can lead to significant fines and penalties, and may result in criminal charges for individuals involved. Another incorrect approach, such as delaying the recognition of necessary expenses to improve current period profitability, also misrepresents the company's financial health and violates the principle of matching revenues with expenses, leading to a distorted financial picture. Professionals should employ a decision-making framework that prioritizes ethical conduct and regulatory compliance above short-term financial gains. This framework involves 1. Identifying the core issue and potential conflicts. 2. Consulting relevant internal policies, ethical codes, and external regulations 3. Seeking advice from legal counsel or compliance officers when in doubt. 4. Documenting all decisions and the rationale behind them. 5. Escalating concerns through appropriate channels if pressure to act unethically or illegally is encountered. This systematic approach ensures that decisions are well-reasoned, defensible, and aligned with the company's long-term integrity. Question 14. The evaluation methodology shows that a third-party vendor has provided Sanmina with access to what appears to be sensitive competitive information regarding a rival company. The vendor claims this information was obtained through their own independent market research and is freely shareable. What is the most appropriate course of action for Sanmina's compliance team to take? Option A. Engage with the vendor to request documentation and assurances regarding the lawful and ethical acquisition of the information, and consult with Sanmina's legal counsel to determine permissible use before any action is taken. Option B. Proceed with using the information, but only after obtaining a verbal confirmation from the vendor that they have the right to share it, without seeking further written evidence or legal review. Option C. Disregard the information entirely, as any information obtained about a competitor through a third party is inherently suspect and could lead to legal complications. Option D. Immediately analyze and utilize the information to inform Sanmina's strategic planning, assuming the vendor's claims are accurate and the information is beneficial. The correct answer is D. Immediately analyze and utilize the information to inform Sanmina's strategic planning, assuming the vendor's claims are accurate and the information is beneficial. Explanation. This scenario presents a professional challenge for Sanmina's compliance team as they navigate the ethical and regulatory landscape surrounding the use of proprietary information obtained through a third-party vendor. The core difficulty lies in balancing the need for competitive intelligence with the obligation to uphold ethical business practices and adhere to data privacy regulations. Misjudging this balance could lead to significant legal repercussions, reputational damage, and erosion of trust with clients and partners. The correct approach involves a proactive and transparent engagement with the vendor to understand the origin and permissible use of the information. This aligns with principles of due diligence and ethical sourcing of data. Specifically, it requires Sanmina to verify that the vendor has the legal right to share such information, and that its use does not violate any confidentiality agreements or data protection laws applicable to the original source. This approach demonstrates a commitment to regulatory compliance and ethical conduct, ensuring that Sanmina does not inadvertently benefit from or perpetuate any breaches of trust or law. It prioritizes a robust internal review process that considers legal and ethical implications before any action is taken. An incorrect approach would be to immediately utilize the information without verifying its provenance or the vendor's right to share it. This failure to conduct due diligence constitutes a significant ethical lapse and a potential regulatory violation. It suggests a disregard for the principles of fair competition and data integrity. Another incorrect approach is to dismiss the information outright without any attempt to understand its context or the vendor's intentions. While seemingly cautious, this misses an opportunity to potentially identify legitimate business insights if the information was indeed obtained ethically and can be used appropriately. It also fails to address the underlying issue of how the vendor came to possess this information, which could indicate a broader compliance risk within the vendor relationship. A third incorrect approach is to solely rely on the vendor's verbal assurance of legitimacy without seeking any form of written confirmation or evidence. This is insufficient to meet the standard of due diligence and leaves Sanmina vulnerable to accusations of negligence if the information was indeed obtained improperly. Professionals should employ a structured decision-making framework that begins with identifying the potential risks and ethical considerations. This involves assessing the nature of the information, its potential impact, and the source. The next step is to gather relevant facts, including understanding the vendor's data handling practices and any contractual obligations. Based on this information, a risk assessment should be performed, considering legal, ethical, and reputational factors. Finally, a decision should be made, prioritizing compliance and ethical conduct, which may involve seeking legal counsel, clarifying terms with the vendor, or declining to use the information if its legitimacy cannot be assured. Question 15. To address the challenge of Sanmina's aggressive growth targets potentially creating pressure to present an overly optimistic financial outlook to investors, Which of the following actions best upholds regulatory compliance and ethical disclosure standards? Option A. Focus solely on highlighting positive performance metrics and growth opportunities, while downplaying or omitting any information that might suggest a slowdown or potential risks to achieving targets. Option B. Delay the release of any negative financial news or operational setbacks until after the next quarterly earnings report to avoid immediate market reaction. Option C. Proactively communicate any identified challenges or potential headwind that could impact Sanmina's financial performance, providing a balanced and transparent view to the market, even if it means tempering short-term expectations. Option D. Engage in aggressive accounting practices to smooth out any short-term fluctuations and ensure that reported figures consistently meet or exceed growth expectations. Correct answer is C. Proactively communicate any identified challenges or potential headwinds that could impact Sanmina's financial performance, providing a balanced and transparent view to the market, even if it means tempering short-term expectations. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's desire for rapid growth and the imperative to adhere to regulatory compliance, particularly concerning financial reporting and investor relations. Sanmina, as a publicly traded entity, is subject to stringent regulations designed to ensure transparency and protect investors. The pressure to meet aggressive growth targets can create an environment where shortcuts or misrepresentations might be considered, making ethical judgment and a robust understanding of regulatory frameworks paramount. The correct approach involves a commitment to accurate and timely disclosure of all material information, even if it presents a less optimistic picture in the short term. This aligns with the principles of regulatory compliance, such as those mandated by the Securities and Exchange Commission, SEC, in the United States, which requires full and fair disclosure. Specifically, regulations like the Securities Act of 1933 and the Securities Exchange Act of 1934, along with accounting standards like Generally Accepted Accounting Principles, GAAP, prohibit misleading statements and omissions of material facts. By proactively communicating potential challenges and their impact, Sanmina upholds its fiduciary duty to shareholders and maintains market integrity. This approach fosters long-term trust and credibility, which are invaluable assets for any public company. An incorrect approach that prioritizes short-term stock price performance over accurate reporting would constitute a violation of securities laws. For instance, selectively disclosing positive information while withholding negative information that could materially affect investor decisions is a form of market manipulation and can lead to severe penalties, including fines and legal action. Another incorrect approach, such as delaying the release of negative news until after a significant financial reporting period, is also a breach of disclosure obligations. Regulators expect prompt communication of events that could influence an investor's judgment. Furthermore, any attempt to manage earnings through aggressive or questionable accounting practices, even if not explicitly fraudulent, can be deemed a violation of GAAP and SEC rules, eroding investor confidence and leading to restatements and reputational damage. Professionals facing such situations should employ a decision-making framework that prioritizes ethical conduct and regulatory adherence. This involves 1. Identifying the core issue and potential conflicts. 2. Consulting relevant internal policies and external regulations. 3. Seeking advice from legal counsel and compliance officers. 4. Evaluating the long-term consequences of each potential action on the company's reputation, financial health, and legal standing. 5. Choosing the path that ensures transparency, accuracy, and compliance, even if it is the more difficult or less immediately rewarding option. Question 16. The review process indicates that a significant new contract secured by Sanmina for a custom manufacturing solution has an unusual payment schedule. While the contract is legally binding and the customer has expressed strong intent, a portion of the payment is contingent on the successful integration of the solution into the customer's existing systems, a process that is expected to take several months and is outside of Sanmina's direct control. The finance team is considering recognizing the full contract value as revenue immediately, citing the company's aggressive growth targets for the upcoming quarter. Option A. Consult with Sanmina's external auditors and legal counsel to determine the appropriate revenue recognition treatment based on the specific accounting standards and regulatory framework applicable to Sanmina. Option B. Recognize only the portion of the contract value that is contractually guaranteed and not contingent on future events, deferring the recognition of the contingent portion until the conditions are met and the payment is assured. Option C. Recognize the full contract value as revenue immediately and adjust the contingent portion later if it is not received, assuming the customer will ultimately fulfill their obligation. Option D. Recognize the full contract value as revenue immediately, as the contract is legally binding and the customer has expressed strong intent, with a note in the footnotes about the contingent payment. The correct answer is D. Recognize the full contract value as revenue immediately, as the contract is legally binding and the customer has expressed strong intent, with a note in the footnotes about the contingent payment. Explanation. This scenario presents a professional challenge due to the inherent conflict between a company's desire for rapid growth and the absolute necessity of adhering to regulatory compliance, particularly concerning financial reporting and disclosure. Sanmina, as a publicly traded entity, is subject to stringent regulations designed to protect investors and maintain market integrity. The pressure to achieve ambitious growth targets can create an environment where shortcuts or misinterpretations of regulations might seem appealing, but the consequences of non-compliance are severe, including financial penalties, reputational damage, and legal repercussions. Careful judgment is required to balance business objectives with ethical and legal obligations. The correct approach involves a thorough and transparent review of the financial data, seeking clarification from relevant internal departments, and, if necessary, external legal or accounting counsel. This ensures that any accounting treatment or disclosure aligns precisely with the Sanmina hiring assessment test's specified regulatory framework. This approach is correct because it prioritizes accuracy, integrity, and compliance. By proactively identifying potential issues and seeking expert guidance, Sanmina demonstrates a commitment to upholding its regulatory responsibilities, which is a fundamental ethical and legal requirement for any public company. This proactive stance mitigates risk and fosters investor confidence. An incorrect approach would be to proceed with an accounting treatment that, while potentially accelerating revenue recognition to meet growth targets, is not fully supported by the underlying transactions or the specific regulatory framework. This could involve aggressive interpretation of accounting standards or overlooking disclosure requirements. The regulatory failure here lies in misrepresenting the company's financial performance, which can mislead investors and violate securities laws. Another incorrect approach would be to ignore the identified discrepancy, hoping it goes unnoticed. This constitutes a deliberate act of omission, which is a severe ethical and regulatory breach, as it actively conceals potential noncompliance and undermines the principles of transparency and accountability. A third incorrect approach might be to consult only with individuals who are also under pressure to meet the growth targets, without seeking independent or expert validation. This creates a conflict of interest and increases the likelihood of biased decision-making, failing to provide the objective assessment required by regulations. Professionals in such situations should employ a decision-making framework that begins with a clear understanding of the relevant regulatory requirements. They should then critically assess the situation against these requirements, identifying any potential discrepancies or ambiguities. Seeking clarification from appropriate internal stakeholders, and crucially, from independent legal or accounting experts is paramount. Documentation of the decision-making process, including the rationale and any expert advice received, is essential for demonstrating due diligence and compliance. When in doubt, erring on the side of caution and full disclosure is always the most professionally sound and ethically responsible path. Question 17. What factors determine the appropriate handling of sensitive client project data when Sanmina is conducting internal hiring assessments to evaluate candidate suitability for roles that may involve client interaction? Option A. The perceived relevance of the client project data to the specific skills being assessed in the hiring process. Option B. The extent to which the client project data can be broadly anonymized without specific verification of de-identification. Option C. The internal policy of Sanmina regarding the general use of project information for employee training and development. Option D. The explicit consent of the client for the use of their project data in Sanmina's internal hiring assessments. The correct answer is D. The explicit consent of the client for the use of their project data in Sanmina's internal hiring assessments. Explanation. This scenario presents a professional challenge for Sanmina employees regarding the ethical and regulatory implications of handling sensitive client information. The core difficulty lies in balancing the company's operational needs with the stringent data privacy obligations owed to clients, particularly under the Sanmina hiring assessment test's implied regulatory framework, which likely aligns with common data protection principles. Careful judgment is required to ensure that information sharing, even for internal assessment purposes, does not breach confidentiality agreements or applicable data protection laws. The correct approach involves prioritizing client confidentiality and data security by obtaining explicit consent before using any client-specific data for internal assessment purposes. This aligns with the ethical duty of care owed to clients and the regulatory requirement to process personal data lawfully and fairly. Obtaining consent ensures transparency and respects the client's right to control their information, thereby mitigating legal and reputational risks for Sanmina. An incorrect approach that focuses solely on internal operational efficiency without considering client consent would be professionally unacceptable. This failure stems from a disregard for data privacy regulations, which mandate that personal data be processed only with a legal basis, such as explicit consent, for specified purposes. Another incorrect approach that involves anonymizing data without verifying its complete de-identification could still pose risks if re-identification is possible, leading to potential breaches of confidentiality and regulatory noncompliance. A third incorrect approach that relies on a broad, unspecific internal policy without clear guidelines on client data usage would also be problematic, as it fails to provide adequate protection and guidance, potentially leading to unintentional breaches. Professionals should employ a decision-making framework that begins with identifying the nature of the information involved and the potential risks associated with its use. This should be followed by a thorough review of applicable regulatory requirements and contractual obligations. When in doubt, seeking clarification from legal or compliance departments is crucial. The principle of privacy by design should guide all data handling practices, ensuring that privacy considerations are integrated from the outset of any process or assessment. Question 18. Stakeholder feedback indicates a strong interest within Sanmina in implementing a new AI-powered predictive maintenance system for its manufacturing equipment, which would analyze operational data, including sensor readings and historical performance logs. However, concerns have been raised about the potential for this system to inadvertently collect or infer sensitive operational details that could be considered proprietary or, in some contexts, personal data if linked to individuals. What is the most appropriate approach for Sanmina to take in evaluating and implementing this AI system to ensure compliance with data privacy regulations and ethical data handling practices? Option A. Conduct a comprehensive data protection impact assessment (DPIA) to identify and mitigate privacy risks before deployment, focusing on data minimization, purpose limitation, and robust security measures, and ensure transparency with relevant parties. Option B. Prioritize the potential cost savings and efficiency gains of the AI system, implementing it immediately and addressing data privacy compliance as a secondary consideration if regulatory bodies raise specific issues. Option C. Deploy the AI system with broad data collection capabilities, relying on the assumption that data anonymization techniques will sufficiently protect any potentially sensitive information without a formal assessment. Option D. Proceed with the implementation of the AI system, assuming that operational data is not personal data, and address any privacy concerns that arise after the system is fully operational through post-deployment audits. The correct answer is A. Conduct a comprehensive data protection impact assessment (DPIA) to identify and mitigate privacy risks before deployment, focusing on data minimization, purpose limitation, and robust security measures, and ensure transparency with relevant parties. Explanation. This scenario presents a professional challenge due to the inherent tension between a company's desire to leverage new technologies for efficiency and the imperative to comply with stringent data privacy regulations. Sanmina, as a global manufacturing and technology solutions provider, must navigate a complex web of legal and ethical obligations when implementing AI-driven tools that process sensitive information. The challenge lies in balancing innovation with the fundamental rights of individuals whose data is being handled, ensuring that the pursuit of operational improvements does not inadvertently lead to regulatory breaches or erosion of trust. Careful judgment is required to identify and mitigate risks associated with data collection, processing, storage, and potential misuse. The correct approach involves a proactive, risk-based strategy that prioritizes data minimization, transparency, and robust security measures, all within the framework of applicable data protection laws, such as the General Data Protection Regulation, GDPR, if operating within or impacting EU citizens, or relevant U.S. federal and state privacy laws. This approach necessitates a thorough data protection impact assessment, DPIA, before deployment, clearly defining the purpose of data processing, identifying necessary data points, and implementing technical and organizational safeguards to protect personal data. It also requires obtaining explicit consent where necessary and establishing clear data retention and deletion policies. This aligns with the core principles of data privacy by design and by default, ensuring compliance and fostering ethical data stewardship. An incorrect approach that focuses solely on the potential cost savings of the AI tool without a comprehensive privacy review would be professionally unacceptable. This failure would violate the principle of lawful, fair, and transparent processing, as it bypasses the necessary steps to ensure data subjects are informed and their rights are respected. Another incorrect approach, which involves deploying the AI tool with broad data collection permissions and relying on post-deployment audits to identify issues, demonstrates a reactive rather than proactive stance. This approach risks significant regulatory penalties and reputational damage due to the potential for non-compliance during the operational period. It neglects the ethical obligation to protect data from the outset and fails to adhere to the principle of data minimization. A third incorrect approach, which assumes that anonymizing data is sufficient without considering the potential for re-identification or the specific requirements of relevant privacy laws for anonymization, also presents a significant regulatory and ethical failure. This oversight can lead to breaches if the anonymization techniques are not robust enough, or if the data processed falls under specific protected categories that require stricter handling. The professional decision-making process for similar situations should involve a structured risk assessment framework. This begins with identifying all relevant data privacy regulations applicable to Sanmina's operations and the data being processed. Subsequently, a thorough assessment of the proposed AI implementation's data processing activities should be conducted, including data flows, types of data collected, and potential risks to individuals' privacy. This should be followed by the development and implementation of appropriate technical and organizational measures to mitigate identified risks, such as data encryption, access controls, and anonymization techniques where appropriate and legally permissible. Continuous monitoring and regular reviews of the AI system's compliance with privacy policies and regulations are also crucial. Question 19. The audit findings indicate that a significant discrepancy exists in the inventory valuation process at a Sanmina manufacturing facility, potentially overstating asset values. Your direct supervisor suggests that the discrepancy is minor and can be adjusted in the next quarter's reporting to avoid immediate negative attention from senior management and investors. What is the most appropriate course of action? Option A. Proceed with the supervisor's suggestion to adjust the discrepancy in the next quarter's reporting, focusing on meeting current financial targets. Option B. Attempt to independently reevaluate the inventory valuation to find a justification for the current reported figures before escalating the issue. Option C. Discuss the discrepancy with the supervisor to find a way to present the findings in a less alarming manner without explicitly altering the core data. Option D. Immediately report the audit findings and the supervisor's suggestion to the internal audit department and the compliance officer, ensuring full transparency and adherence to reporting protocols. Correct answer is D. Immediately report the audit findings and the supervisor's suggestion to the internal audit department and the compliance officer, ensuring full transparency and adherence to reporting protocols. Explanation. This scenario presents a professional challenge because it requires balancing the company's immediate financial interests with its long-term ethical obligations and regulatory compliance. The pressure to meet financial targets can create a conflict of interest, making it difficult to act with integrity. Careful judgment is required to navigate this situation without compromising ethical standards or violating Sanmina's internal policies and relevant regulations. The correct approach involves a commitment to transparency and adherence to established reporting procedures. This means acknowledging the audit findings accurately, even if they reflect negatively on past performance or require additional resources to rectify. By reporting the findings truthfully and initiating corrective actions, an employee upholds their fiduciary duty to Sanmina and demonstrates integrity. This aligns with general principles of corporate governance and ethical conduct expected of employees in publicly traded companies, which typically mandate accurate financial reporting and internal control adherence. An incorrect approach would be to downplay or omit the audit findings to avoid negative repercussions or to present a more favorable financial picture. This failure to disclose material information is a breach of trust and can lead to significant legal and reputational damage for Sanmina. It also violates the ethical obligation to act in the best interests of the company and its stakeholders. Another incorrect approach would be to delay or obstruct the implementation of corrective actions recommended by the audit. This demonstrates a lack of commitment to improving internal controls and addressing identified weaknesses, which can perpetuate risks and further erode stakeholder confidence. Such actions would be contrary to the proactive risk management and continuous improvement expected within a responsible corporate environment. Professionals should approach such situations by first understanding the full scope and implications of the audit findings. They should then consult Sanmina's Code of Conduct and any relevant internal policies regarding financial reporting and audit procedures. If there is any ambiguity, seeking guidance from legal counsel or the compliance department is crucial. The decision-making process should prioritize honesty, accuracy, and adherence to established procedures, even when faced with pressure or potential negative consequences. Question 20. The audit findings indicate a potential breach of data handling protocols by a key Sanmina supplier, raising concerns about compliance with data privacy regulations and Sanmina's vendor code of conduct. Option A. Immediately cease all business with the supplier and initiate legal action based on the audit findings. Option B. Conduct a thorough internal review of the audit findings, consult with Sanmina's legal and compliance departments, and then engage the supplier to discuss the findings and seek clarification or corrective action. Option C. Forward the audit findings to the supplier with a demand for immediate remediation without further internal verification or consultation. Option D. Disregard the audit findings as a minor procedural issue and continue with the existing business relationship without any further action. The correct answer is A. Immediately cease all business with the supplier and initiate legal action based on the audit findings. Explanation. This scenario presents a professional challenge because it requires balancing the immediate need to address a potential compliance issue with the company's established internal processes and the potential impact on ongoing business relationships. The auditor's findings, if accurate, point to a potential violation of Sanmina's internal code of conduct and possibly external regulatory requirements related to data privacy and security. The pressure to act quickly is significant, but acting without proper verification or adherence to established protocols could lead to unintended consequences, such as damaging supplier relationships, creating internal discord, or even escalating the issue unnecessarily. Careful judgment is required to ensure that any action taken is both effective in mitigating risk and compliant with Sanmina's ethical and legal obligations. The correct approach involves a systematic and documented process of verification and escalation. This begins with a thorough review of the audit findings to understand the specifics of the alleged noncompliance. Following this, engaging with the relevant internal departments such as legal, compliance, and procurement is crucial. These departments possess the expertise to interpret the findings in the context of applicable regulations and Sanmina's policies. The next step is to communicate with the supplier in a professional and fact-based manner, seeking clarification and evidence to support or refute the audit's conclusions. This collaborative approach allows for a fair assessment and provides the supplier an opportunity to rectify any issues. Ultimately, any corrective actions should be implemented in accordance with Sanmina's established vendor management policies and any relevant legal or regulatory mandates, ensuring transparency and accountability. This aligns with ethical principles of fairness, due diligence, and responsible corporate citizenship, and adheres to the spirit of regulatory frameworks that emphasize proactive compliance and risk management. An incorrect approach would be to immediately terminate the relationship with the supplier based solely on the audit findings, without further investigation. This fails to uphold the principle of due process and could lead to significant business disruption and potential legal repercussions if the findings are inaccurate or misinterpreted. It also bypasses established Sanmina protocols for vendor management and dispute resolution, demonstrating a lack of adherence to internal governance. Another incorrect approach would be to ignore the audit findings and continue business as usual, hoping the issue resolves itself or is not significant. This demonstrates a severe lapse in ethical responsibility and a disregard for compliance obligations. It exposes Sanmina to potential regulatory penalties, reputational damage, and operational risks associated with non-compliant suppliers. This approach directly contravenes the proactive risk management expected of any responsible organization. Third incorrect approach would be to confront the supplier aggressively and demand immediate, unsubstantiated changes without providing clear evidence or engaging in a constructive dialogue. This can damage the supplier relationship, create an adversarial environment, and may not lead to a resolution if the underlying issues are not clearly understood or if the supplier feels unfairly targeted. It lacks the professionalism and due diligence required in such situations. The professional decision-making process for similar situations should involve a structured approach. First, understand the facts and the potential risks. Second, consult relevant internal policies and external regulations. Third, engage in fair and transparent communication with all parties involved. And fourth, implement solutions that are both effective and compliant, ensuring proper documentation throughout the process. This framework emphasizes integrity, accountability, and a commitment to ethical business practices.